Alrighty, ladies, gentlemen, business owners, we got QuickBooks up. We're going to walk through some stuff today. So a few months back, we recorded a short on the big three financial statements, what they mean for your business. So today we're going to dive in. We're going to do a little bit more of a deeper dive here. So here I have the sample QuickBooks company opened up. So what we're going to do is we're going to dive into the balance sheet, the profit and loss, and the statement of cash flow. Go through what they mean, how to read them, and then also give you guys kind of a sneak peek of some of the services that we are going to be providing you with at Ledgerly on a monthly, quarterly, annual basis. So let's jump in. So we got the sample company, we got Craig's Design and Landscaping Services. So before we jump in, let's get to know Craig and his business. So Craig's Design and Landscaping Services. So what does that tell us? He's most likely going to be a service business. He's going to be cutting grass, mowing lawns, most likely going to be out and about. So he's not going to be selling a good. He's actually going to be providing services. So what that tells me is that he probably doesn't have inventory. Okay, so he's not selling a product. He's just providing services like we're doing at Ledgerly. We're providing services to you and your business. So that's Craig. So let's jump into the balance sheet first. So we're going to go to reports. We are going to go to, I don't know why it's not loading, so let me just type in balance sheet. Let's see. Okay, balance sheet. All right, here we go. Let's run it for this year. Okay, this year, run report. All righty, we got Craig's balance sheet here. So overall, the balance sheet gives us three things. It gives us our assets, that's what the company owns, liabilities, that's what the company owes, and the company's equity, which is basically an accumulation of the company's historical earnings and losses throughout the year. So let's start at the top. We got our first asset here. We got cash. He's got a checking account. He's got a savings account. So cash is cash. Cash is liquid. It's in the bank. This is basically what Craig can go out and take out of the bank. So he's got his cash. He's got his accounts receivable, which is what he is owed by his clients. So he has $5,200 in accounts receivable. So he's going to be hopefully collecting on that $5,200 rather soon. Okay, so he does have a little bit of inventory here. So maybe he has some goods that he just purchases to use job to job. It's a small amount, so not too concerned. So he's got a little bit of inventory. He's got undeposited funds, which is basically cash. It just hasn't been deposited into the bank yet. And then he has, okay, he's got fixed assets. He has a truck that he purchased or financed. I guess we'll find that out once we go to the liability section. So he's got a truck here. One thing that he's missing here in his fixed asset section is his accumulated depreciation. So that's going to be it's called a contra asset. So it's going to show a negative balance here against this 13,000. So that's something that we would have to add in there for him. So that's what he's got for his assets. Okay, let's go down to his liabilities here. He has some payables. So he's got $1,600 in payables that he owes to his vendors. Looks like he has a credit card here. He's got a MasterCard. Okay, he owes $157.72 on his MasterCard. Okay. He's got this thing called Board of Equalization Payable. I'm not 100% sure what that means, but it might be some type of property tax or some type of town assessment that he owes on. Okay, so he owes $371 there. And then he has a loan payable of $4,000, and he also has a note payable of $25,000. So this loan payable of $4,000 might be tied to this 13,000. Okay, so it's backed by collateral. We don't know that unless we dive into the detail. We're not going to be doing that today. We're basically just showing you what these numbers mean. So he's got a loan payable, he's got a note payable. These things could be from maybe an investor or maybe his brother or sister or maybe money he put into the business as a loan, or it could be tied to that truck. Okay. We're not going to get into this opening balance equity because this number's wrong. So that number's wrong. So we're not going to get into that. And then he's got $1,600 of net income. So before we jump to the profit and loss, this was the balance sheet. This is his assets, his liabilities, and his equity. His assets are what he owns, liabilities are what he owes, and the equity is the accumulation of all his earnings and profits. All right. So now see this number here. He's got 1,672.46 in net income. Now we're going to go over to the profit and loss, and we're going to scroll all the way to the bottom, and that's what he has here. Net income, 16.7. Can't talk today. 1642.46. That is what he has on his balance sheet. That's his accumulation so far this year. So profit and loss. What's the profit and loss? It's exactly what it sounds like. He has his income. So he's got design income, landscaping income, income from his job materials, some labor from pest control services. So he's looking at $10,200 in income. He has cost of goods sold, which is probably costs related to his jobs. He's got some advertising expenses, auto expenses, insurance, equipment rentals, materials, legal professional fees. Okay, he's got all this stuff. Now there's two expenses that I'm not seeing on here. And two of those are depreciation expense and interest expense. And the only reason I'm say those is because when we were on the balance sheet, let's go back to the balance sheet quick. We had this fixed asset, this truck for $13,000. He had no accumulated depreciation. So we need to add depreciation expense, number one. And then number two, he has these two loans down here. He's got the loan payable and the note payable. He should have interest expense associated with that. So I'm not seeing interest. I'm not seeing depreciation. There's probably some other expenses that he doesn't have on here that us at Ledgerly would find going through everything with a fine-tooth comb, but this is just the broad picture, overall details. Okay, so this is his profit and loss. Meals and entertainment, rent, lease. Okay, he's got miscellaneous down here. Now, what we see is, miscellaneous, ask your accountant, other expenses, basically expenses that are towards the bottom that would jump out to us, or a bookkeeper, a good CPA that would go back and ask these questions. So if we drilled into the detail, we would most likely ask those questions. All right, so that's the balance sheet. We got the profit and loss here that we just went through, and we just saw that this 1642 rolls up onto the balance sheet. And now, last but certainly not least, let's jump to the statement of cash flow. Now, this is not a knock at QuickBooks or Intuit. I'm not a big fan of their statement of cash flow, but let's walk through their cash flow. What we usually do at Ledgerly is we're going to build one from scratch. We'll use the base and the foundation of this report that you're seeing here, but we're going to actually put the accounts in the right bucket. So let's just jump into it, how it is. So statement of cash flow, again, it shows you your inflows and outflows, where your cash is coming from and where your cash is going. So we start with net income. So we start with net income and we reconcile back to our ending cash. So this 1642 is what we saw already. And this 4,063.52 is what's going to be on our balance sheet as our cash. Apparently it's not. Wow, looks like Craig is, oh, it actually is. It is his cash, because we need to grab our calculator. Let's bring it over here. It's going to be our $2,000 plus our undeposited funds. right? There we go. 4,063.52. Oof, thank God. So that's what we got here. All right. So we have our net income. Now, if we look at our accounts receivable here, on our balance sheet, our accounts receivable went up by 5,200 bucks. So we don't have that cash yet. So it's going to show on our statement of cash flows as negative. Okay. So when our assets increase, our cash technically decreases for the sake of our cash flow. So what that means is our accounts receivable actually went up, so our cash went down. Our inventory also went up, so our cash went down. Now it's the inverse with the liabilities. Okay, as our liabilities increase, our cash increases. So we know that our accounts payable went up. What does that mean? So our accounts payable went up. That means we're hanging on to our cash since we haven't paid it. Our accounts payable went down, means that we paid it and our cash goes down. So our AP went up, our MasterCard also went up. This board of equalization went up, and this loan went up. So that means our cash went up. Okay. So when our assets increase, our cash decreases, and vice versa. And when our payables, liabilities increase, our cash increases as well. Okay. So that's our operating cash flow right here. Okay, then we have our investing activities. That's basically investing in assets and equipment that's going to generate revenue. So we know that he bought this truck. The truck is an asset. Our asset went up, which means our cash went down. That's our negative right here. Okay, and then he has financing activities, basically taking out loans, having investors, anything for cash going back into the business or cash coming out of the business to pay your investors. That's going to be this note payable here. You could argue that this loan payable should be down here as well. Again, QuickBooks does an okay job of building the cash flow, but then most likely at Ledgerly, we're going to be putting them into the proper buckets, the statement of cash flow. So that's, guys, that's why I love the statement of cash flow, because we reconcile from our net income and we reconcile back to what we actually have on hand or what's on the books for our cash. And we see all the inflows, the outflows. We get to see if our operating activity is healthy, because that is the big one. If our operating cash flow is not positive, that's a problem. That means that we're most likely we're paying our liabilities too fast, and we're not getting collections from our customers on our accounts receivable. This is the most important one. We could have, $500,000, $1 million in the bank, but if that's all coming from loans and our revenue isn't showing that, then that's not healthy. So guys, this is just kind of a sneak peek of what the balance sheet means, what the profit and loss means, what the cash flow means, what they mean for you, how to read them at a very broad level, and then also just this is just a sneak peek of some of the services that you guys are going to get with us at Ledgerly. So I hope this helped. I hope this gave you some more insight into your business, and any questions, any comments, and any recommendations too of what you're seeing here. Any questions that don't hesitate to reach out. This is what we want to do, is basically give you the broad bird's eye view of what your financials are doing for you and your business. So take care, guys. Thanks for tuning in, and please reach out, schedule your free consultation with us, and we're looking forward to working with you here at Ledgerly. Take care.